G'day folks, welcome back to another update for natural gas. Now have the chart bullish. We'll go into the charts in a moment. Before we go any further, make sure you hit that like and subscribe button to support the channel. Also reference a plus videos where we look at various strategies for you to consider trading with. Now in terms of the outlook, I won't read through all of this. I'll let you pause the video and read through it more closely if you like. But in terms of demanding is decelerating with subdued growth, especially in Asia. Supply remains constrained but easing, particularly as US LNG exports rise and Europe ramps storage ahead of winter. Prices soft amid robust storage, but expected to trend upward in 2026. Bigger price shifts may occur beyond 2027 as LNG oversupply builds. And for geopolitics, a mix of volatility and realignment from Israel-Iran tensions to Russia-China deals, European diversification and alternative Asian energy paths remain critical influences of market direction. So this is natural gas, and we'll look at the weekly first off. We always look at the long-term trends. You can see there it's a bit uncertain in terms of if it's bullish or not. On the weekly, it's still pretty much a neutral positioning. The price is below the moving averages, whereas the CCI is broken above its moving averages. We want to see both price and CCI in alignment, like they were back here, for example, when you would have been going short or going long during this little period here, or even back here going long. At the moment, it's a bit uncertain. I'd like to see the price break higher above those moving averages in alignment with the CCI to be more confident of bullish moves. But having said that, if you're trading on the smaller time frames, like the 1 hour, this is the daily chart. You can see the daily's already broken above the moving averages on the price and also the CCI, and that was after this bullish divergence. And we did draw a target on that, just to revisit it, going back to that recent high before the divergence started. That hit that 23-38% range. For those new to the channel, that's a minimum target range we expect. Sometimes it just kisses it and bounces back down. Other times it fluctuates in that range and consolidates. Other times it breaks right through. And that's what it's done in this case. It's broken right through and actually currently sitting at the 50% level. So that's a bullish divergence, and currently on the daily we're in a bullish mode with both the price and the CCI above the moving averages. Back here you can see there you would have been going short during that period with the exception of these little spikes, until you got to this divergence on the daily. We also look at the 1 hour chart for any micro moves, even if you're trading on the daily. And by micro moves, I'm talking about looking at for any divergence. Back here again, as we see there, we had a few bullish divergence back here. It broke above and you would have started going long at that period. Before our last video, we projected this bearish divergence and we drew a target range. You can see there it actually came down and touched the target, then it eventually fell right through that 23-38% range. And again, just to demonstrate, going back to that low there, that's that 23-38% range, which we projected previously. Again, it broke just below that 38% and then it bounced out of there. So I don't trade these divergences because you don't know how far it's going to fall. So if you trade for it to expect it to go down to a particular percentage and it doesn't, then you're going to be a high risk trade. Always trade in direction of in this case, the daily if you're trading on the hourly time frame. And what it's done since then, the prices moved higher on the moving averages and currently it's below those moving averages, and so is the CCI in that moving average range. Although notice as well, we do still have another, you can take it from this point, you take it to the same period, we still have a bearish divergence, which means we might see another retrace and it could be starting that as we speak. Let's take it back. I like taking back to a significant low. Let's take it back to that level. You can see there we've got another 23-38% range possibly it may come down to. Now currently it's opened up today after the weekend with a bit of a high above the moving averages, but again we'll keep that in there for the moment. If that continues higher along with the price, then we're going to invalidate that divergence. But let's put it in there for the moment and see how it goes. Again, I don't trade these if I'm going long in this case. First of all, I wouldn't be in a long position at the moment because it's broken down below the moving averages. So always trade in direction, as I said, of the moving averages of the price and the CCI, but especially in alignment with the daily trend. So as I said, at the moment, you'll be taking long trades only, no short trades. Let's look at the back test. What I've got here, I've got two back tests. I've got the short positions first, going back from this period, marked by that arrow. You would have taken these short positions on the 1 hour time frame accordance with the daily. Had a bit of a drawdown here, but again, notice we had a bearish divergence and you wouldn't have been going short during this period. And if you can tell me why in the comments, that'd be appreciated. That's because, I'll give you a quick hint, the moving averages of the price and the CCI are moving higher. So you want to avoid going short during those periods and you would have avoided that drawdown. During this little period, you would have taken some short positions, and overall, had you stayed in the whole trades, all the trades, you'd be up around about $19,000. But again, avoid taking those and keeping those positions open when it's against you. So that would have been a bit lower than that revenue. I've also got the long positions from this point on the 26th of August, going long from there. You can see there it's averaged down a couple of times, and at the moment you would be paying attention to that bearish divergence. No long trades open, and that would have generated about 5,400 according to the $10 contracts of natural gas. So here we're looking at BOIL. On the weekly, it's a bit hard to read this chart, but you can see that it's very consolidated period back there. Although looking closely, you can see the price is below the moving averages, and so is the CCI. So bearish momentum still on the weekly. On the daily, you can see there it's been short positioning mostly, with a couple of exceptions. And currently the CCI is broken above the moving average, and the price has just peaked above. But notice the moving average range, and that's why I use the moving averages, because if it's a single moving average, it's hard to detect where how far the momentum is going. For example, back here, when it consolidates, you can see those moving averages are very constricted. That's a consolidation period. So you want to avoid, if you can, avoid going long or short. I'd like to see it be decisive. Like for example here, that would have been ideal to go long during that period when the moving average is expanded along with the CCI and the price. Another consolidation back there. So ideally trade when the moving averages are apart, like in this period here, going short when both the CCI and the moving averages are apart. So going short predominantly on the daily in this case, but again closing out your positions, you can see there we had a bit of a, it's a bit hard to read there, but we've got a bit of a bullish divergence between those lows on the CCI and those higher lows on the CCI versus lower lows on the price. Now this is a bit tricky to project this one, because if we did draw a retrace, you can take it back to that high, and you can see there it's not far off hitting that 23-38% range. If you take it back to that level, it's just a bit higher than that, then likewise to that. So it depends where you draw the Fibonacci. I like taking it back to a significant, in this case a significant high, which would probably qualify for that one there. So let's assume that's the minimum retrace level we can expect the price to retrace at the minimum. Again, it could go higher. The CCI is showing good momentum at the moment to the long side, so we'll leave that in there, see how it goes in the coming days. On the hourly, again taking short positions only according to the daily. So here, even though it's broken higher, you could have taken that long trade, but again, it's a bit of a gamble because the overall momentum is still to the downside. And you can see there it's still broken below the moving averages of the price and the CCI. So that's why I like to trade in direction of the higher time frame, the daily. So again, we had another bullish divergence back here. Had a few actually, and I've marked each of those. That one was hit with that price movement. You can see there it's just kissed it and broke down to the downside. There was another bullish divergence there that failed, and this other one here looks like it's just probably just kissed it as well. It's a bit hard to see. So the low, if that was drawn there, that'd be yeah, probably just touched there. So again, always, I don't trade those, because if that happens and you expect it to go higher, you're going to be sorely disappointed. So always trade in the direction of the daily time frame. Now if we go to the back test, here we've got the short positions going back here. So going short from the 19th of May, around this period. This is trading $5,000 lots of ETFs for BOIL. You would have taken short positions. A couple of average downs there. Always pay attention to the divergence on the 1 hour, but also close out your positions when the daily breaks into the daily CCI. At the very latest, you should close out your positions at those points. You can see there that also coincides, for example, that one there, closing out your position when it touches the daily CCI. That would have closed out at this point here on the hourly, which is near just when it started turning up as well. And you would have closed out your positions there. UNG is showing still a bearish momentum. On the weekly, the price is below the moving average, and so is the CCI, although it's making a bit of an upswing at the moment, nothing too dramatic. On the daily as well, you can see there we were in short positions back here, with the exception of that little period and there, but currently we're also broken above. That could just possibly be another false break like it was back here, so don't go long yet until you started seeing these moving averages start turning up, and you could possibly take a couple of trades on the 1 hour time period if that happens. So the daily is cautiously bullish, but I would call it neutral at the moment. I'd like to see those moving averages bend up. You can see there we had a bullish divergence versus lower lows on the price, and that started to bounce. And again, it depends where you draw the Fibonacci retrace. If you take it back to that high, you can see there it's just touched that 23-38%. Could go higher, but could have just touched it and start to reverse, so we don't know. And that's why I don't trade them, because they're a bit unpredictable in terms of where they're going to stop. So that's the daily. If we go to the 1 hour time frame, looking for any micro moves, you can see there we had a few similar to BOIL. We had a couple of bullish divergence back there that played out, and this one currently also is now below the moving averages, so taking predominantly short trades only, even though we had a bit of a break to the upside according to that bullish divergence. If we go to the 1 hour back test here, it would have been going short from the 15th of May according to the daily. You can see there, similar to UNG, to BOIL, we would have taken some short positions back there. Again, paying attention to any divergence. As I said, at the moment, you'd be avoid going short, because that's in a bit of an upswing at the moment, and that's why there's no positions open. So that's done okay, trading $5,000 lots of, in this case, we're looking at UNG. So KOLD on the weekly is bullish, although notice last couple of weeks is pulling back, with the CCI pulling back as well. So cautiously bullish on the weekly. On the daily, we've got currently a bearish, somewhat slightly bearish momentum at the moment. The price is broken below, but it's making a bit of an upswing at the moment. The CCI is also in a downtrend, so avoid going long until we see both CCI and price break higher on the moving averages. You would have been going long from this period back here when the CCI and the price broke above, and you would have closed it out the very latest if you're trading on the hourly when it broke down into the CCI at that point there, and then re-entered another long position on the according to the hourly. This is the daily chart, but trading on the hourly, you would have gone in this momentum when the price broke above on the daily here, taking those trades. So that's the daily at the moment, but cautiously I'd be avoiding going short or long at the moment until we saw a more decisive move either way on the daily if you're trading on the hourly. And on the hourly, again, you can see there we had a few bearish divergence, and you would have closed out your positions in each one of those points if you're going long. And at the moment, again, avoid trading this in isolation. You always trade in direction of the daily. So even though the daily is showing some short positions, was it showing short? The daily here, yeah, you could have taken a couple of trades there when it's showing short positions according to the daily, but just be cautious, because these moving averages, I'd like to see them bend down as well to give you a bit more confidence in the bearish momentum. So at the moment, the hourly is broken higher, the CCI is higher, the price is higher, but notice the moving average band is starting to turn up. That's a good sign for positive bullish momentum. So we could have a turning point here for KOLD to turn further to the upside. Now on the 1 hour back test, I've started it back here from the 25th of June, going long, and notice here most of those would have been nice little trades to take. This would have been a drawdown going against you, and you would have avoided taking that drawdown. Why? Because notice back here, for example, on the 11th of July, the CCI on the daily at the latest touched that moving average band on the CCI, and you would have got out earlier theoretically, because when you see the price and the moving average of the price and the moving average of the CCI break down in that period back there, that coincides with the daily as well, and you would have got out with a small gain at that point. It was about $600-700 at that point before that drawdown. So always pay attention to A, the daily trend, but B, whenever you see the moving average bands of the price on the hourly of the CCI and the price break down, in this case going long, when you see them break down, you get out of the trade. So thanks for watching. Make sure you hit that like and subscribe button to support the channel, help distribute it. And also, if you want to get more insight into some shares across various regions of the world's markets, consider subscribing to the Patreon page, where we look at weekly bullish share scans. Thanks, and see you in our next video.